Dubai Long-Term Property Investment 2026 is becoming a much smarter lens than the old quick flip mindset. A lot of people still look at Dubai and ask the same shallow question: is it still hot? I think that question is now too simple. The better question is this: where are the best long-term entry points if the market is becoming more selective, more professional, and a little more negotiable? If you want Astra Terra Properties to help you compare real communities, payment structures, resale logic, and investor-grade opportunities before you commit capital, message us on WhatsApp early. In a maturing market, the quality of the decision matters more than the speed of the decision. Welcome to Astra Terra Properties. In this video, I am breaking down why patient buyers are gaining better entry points in 2026, what the official Dubai data still says about demand, and how serious investors should think if they want to hold for 5, 7, or 10 years instead of chasing fast hype. Let's start with the big idea. Dubai is not becoming weak. It is becoming more selective. That is a very important distinction. Official Dubai land department data shows the market is still large, liquid, and globally attractive. Q1 2026 real estate transactions reached AED 252 billion across 60,303 deals. The same release showed 29,312 new investors, AED 148.35 billion in foreign investment, and AED 87.71 billion in luxury real estate investment. Those are not numbers from a market falling apart. They are numbers from a market that still has depth. But now layer in the tone shift. Recent reporting across Khaleej Times, the National, and Gulf News points to the same pattern. Buyers are becoming more patient. Resident buyers are moving toward ownership earlier. Sellers in some segments are showing more willingness to negotiate. And apartment handovers have stayed above 10,000 units for a second straight month. That combination changes investor behavior. In a fast, euphoric market, almost everything looks investable because momentum hides weak asset quality for a while. In a more balanced market, real quality differences start mattering again. Bad layouts, weak towers, inflated asking prices, overhyped launches, and poor advice all become much easier to spot. That is why I think 2026 can actually be better for disciplined long-term buyers than the hottest phase of the cycle. Patient buyers now have something they did not always have before: more optionality. More supply is handing over. More comparisons are available. More owners understand they cannot price every average unit like a trophy asset. And that means the serious buyer can finally underwrite instead of just react. Another signal I really like is resident buyer conviction. Khaleej Times highlighted that the renter-to-owner journey in the UAE has now shortened to about 4.8 years. That matters because it tells you Dubai is not just attracting quick capital. It is becoming stickier as a place to build a life. And when resident demand becomes more important, the market usually gets healthier because these buyers care about schools, commutes, livability, service charges, holding comfort, and future resale depth. The National also framed the current phase as the most favorable conditions for buyers in several years, with villa prices stabilizing, transaction volumes slowing from peak speed, and sellers showing more willingness to negotiate. That does not mean everything is cheap. It means buyers finally have room to choose more carefully. That is very different. Then add the supply story. Gulf News reported that apartment handovers have exceeded 10,000 units for the second straight month. That matters because more finished stock means you can compare real product quality instead of buying a rendering and a promise. It also creates clearer separation between assets that deserve long-term confidence and assets that only looked good during maximum momentum. So, what do patient buyers do differently in this environment? First, they focus on the asset, not the headline. They do not buy because a developer event feels urgent. They buy because the numbers, community quality, and exit logic still work if the market stays balanced for longer. Second, they stress test every deal. What happens if rents flatten for a period? What happens if nearby handovers increase competition? What happens if resale takes longer than expected? A real long-term opportunity should still make sense when you ask harder questions. Third, they choose communities with genuine end-user and tenant depth. In places like downtown Dubai, Dubai Hills Estate, Business Bay, Al Furjan selected buildings in JBC, and the right pockets of Dubai South, the difference between strong stock and weak stock is becoming much more visible. In 2026, area selection is not enough. Building selection matters. Layout matters. Service charges matter. Delivery quality matters. Fourth, patient buyers are not afraid to compare ready property, near handover stock, and off-plan side by side. The old answer used to be easy: off-plan first, because the hype cycle did a lot of the work. Now the answer is more nuanced. Ready property can offer immediate visibility on building quality and rental depth. Near handover stock can reduce execution risk. High-quality off-plan can still work, but only when the developer, payment structure, and long-term demand profile are strong enough. There are still mistakes buyers make. The first is assuming every cooling signal means a crash is coming. I do not think that is the right read. A healthier expectation is more selective repricing and bigger performance gaps between strong and weak assets. The second mistake is chasing discounts without asking why the discount exists. Sometimes the issue is not price. It is quality. The third mistake is over-leveraging in a market that now rewards patience. If your financing leaves you no holding comfort, even a good asset can become stressful. My view is simple. Dubai's long-term case is still powerful because the structural drivers are still here. Migration, tax efficiency, infrastructure, business formation, international capital, and global lifestyle appeal. But 2026 is less about buying anything fast and more about buying the right asset well. That is a better market for serious investors than a pure mania phase ever was. The bottom line is this. Dubai long-term property investment 2026 is not a boring strategy. It is probably the sharpest strategy in the market right now. Patient buyers are gaining better entry points because demand is still strong, but urgency is no longer doing all the thinking for them. And when patience meets good underwriting, that is where the strongest 5 to 10-year outcomes usually start. If you want Astra Terra Properties to help you compare real Dubai opportunities with better due diligence, better timing logic, and smarter long-term positioning, visit Astra Terra AE or message us on WhatsApp today. And for your next watch, go to our market update, our foreign buyer guide, or our off-plan payment plan breakdown.